Hi, this is Joel, and today I'm going to talk about my playbook trade from January 3rd, 2019. So, market conditions, big picture, where the market did not fall apart yesterday amid negative China news after a gap down, which was a short term good sign. But then there was very negative Apple news last night that they lowered guidance by $8.7 billion, which is rumored or maybe announced. I didn't look into it further today, but I heard it was having to do with just stuff falling apart in China. So then the market gapped down again today because as soon as that news was announced yesterday after hours trading, Apple lost 12 points in a matter of a minute. Um, so some information about IWM. It found support yesterday at that 131.54 level before making a nice bounce up to 135 and closing 20 cents below. But then it was gapping down today approximately a dollar from there in the AM. So some fundamentals for this trade is basically, again, established technical level and the market overall just kind of weak. Like I know I said it didn't fall apart yesterday, but there was negative news 2 days in a row. Um, and yeah, it wasn't like it was, currently just pounding and things were just looking overly good and hopeful today. And then in addition, like while I was making the trade, the market wasn't currently like on a big run of its own. So the other thing is like you're looking for an initially like a failed bounce and then another interaction with support that yields a smaller bounce. And it literally looks like, I don't know, if you dropped something and it bounced once and then almost like if you dropped a golf ball and it hit on some cement, made like an okay bounce, but then the second time it landed, it had like moved off the cart path and like hit some mud and just kind of just thudded into the ground. That's what you're kind of looking for when you see that. I mean, at least lately, I can't say I've done it 1,000 times or anything. It seems like a failure of that level is imminent. So you can see from yesterday, January 2nd, you can see that kind of in the early morning, it consolidated after it made that bounce underneath the 130, 150, then consolidated after it got above 133, and then kind of just almost never looked back the rest of the day. Um, so that was a key level. Okay, so I could insert this video into my PowerPoint. So what I'm gonna do is I'm just gonna bring this up and play it for you guys so you can see. Um, I mean, it didn't technically bounce from the level, but it was kind of weak on the open, got kind of overextended, came down, got within 10 cents, bounced, and didn't even, it made a lower high and started coming down, coming down, coming down, bounced again, but look, it was even less of a bounce this time. And I guess I skipped a step when I was going through the fundamentals. The second bounce maybe isn't like a total golf ball in the mud type of thing, but it's like a much smaller bounce. Um, and then the next one you can see it comes down. It's basically not bouncing at all, just sitting there. And then when you see this thing about to happen, I mean, this would have been the ideal entry point somewhere around like the 10 cents or whatever. But I kind of noticed it here. Let me start playing the video because it's kind of long. Um, and you can see where my mouse is clicking right now. Um, oh, actually, it looked like I already put the order in there. Um, sorry, I guess I skipped that. Let me just rewind it. Okay. So you can see, let's get the whole thing in here for you guys. Okay, you can see it comes down. So it tried to bounce. Now it's coming back down, just sitting here. Here's the point where I'm like, okay, this thing is like hanging on by a thread. I got to get short. And I should have just hit it the first time, but I'm really working on just trying to get over my hesitation. I just have too many thoughts going through my head. And just eventually, though, I pulled the trigger here and just take the bid at 98 cents. Um, and just initially unsure of where to put my stop, was going to put it right above there. And I thought, you know what? Just from looking at it, it looks like putting it over 10 cents would be the logical spot. Um, you can see it's hanging out there. I probably didn't need that much of a stop, but like I said, I was fairly confident. Um, It's okay. Now you can see here, and this is a candle where it really, here we go. See a lot of red, the flush. So I kind of got excited here. Um, what can I say? It's been a long few days, and I I sold half my shares, um, which is okay because sometimes with this kind of thing in these market conditions, failure of a level happens over like an hour, and this could just be like a little blip, which you see it actually was. But um, in any case, I sold half my shares for like an 11 cent per share gain, and then adjusted my stop up over um, just right over where my entry point is, over the 133. Um, and then you can see here, let's see. Okay, looks like I'm adjusting my stop actually. Um, okay, there I took half the shares, I think, when it, maybe I should give myself some credit. It did look like it might be about to bounce when I took half the shares. Um, okay, so it's still hanging out there. And I think when it flushes down to the 70s, then I adjust my stop down. And then it really starts accelerating downhill. And let's see here. Just watching it, watching that big volume. I want to say I took my second, sold half of my shares when it got down into like the low 60s. Let's see. Need to get more versant with these hotkeys. It's going to cost me not using them currently. Okay. So it looks like it was at 67 cents that I took that second partial. And then I set my stop at 82, which I feel like I've had this situation so many times. I set my stop at 82 cents and I get stopped out. In this case, though, I was giving this a chance to like really fail, but um, it comes back here and I get stopped out. Then the thing goes on a run, which you won't see in the video, gets back up over 133 before really failing and getting down and testing that 130, 150 again. And something I just noticed too is like, look how overextended it's getting. And in my opinion, you shouldn't just make trades based on something like that. That's like a Keltner channel. But you can use that with some information to say like, okay, it just failed this level. It looks very overextended. It's been on a long down run basically the whole day. Um, it would make sense if the thing kind of came back to earth, even if the thing's going to be in an overall downtrend. So it's just like another secondary piece of information you can look at um, when trying to gauge, how many variables are in your favor for a trade. So I get stopped out here, and it was a pretty good trade. Like, I took profits, and the thing I might do differently is just not take that initial half of my shares at 87 cents. Um, but hindsight's 2020. At least I extracted some okay profits from what turned out to actually be a failed initial failure of the level. Um, wasn't the big move that I had initially been hoping for, but in talking about this, it's been helpful to just kind of see how it played out again. So you can see, I thought, okay, nice, it's pulling back a little bit. It might be ready to really flush down, and then you can see some like buying happens here. See? And there we go. But, I guess even though I got stepped out here, in my defense, this was actually a good place to put it because you can't see, but the thing goes up to get above the 133 level again pretty quickly. It's not like I missed out. And kind of once it got up there, yeah, you can see here, see it came down. Here's a candle I got stopped out on, then it boom. So actually, you could say like, yeah, once it got above this 80 level, it kind of went to shit. So you'd want to be out at that point anyways. So I hit the bid, as you saw, at 98 cents. I sold half my shares at 87. I should say 67. But sold 25 more there. And then got stopped out at 82 cents. But you can see that it goes on a big move down. And another lesson that I learned here that I will do in the future is to just be more patient after I'm done with a trade, especially one that is a winning trade, not get too satisfied with myself and just keep watching and just think to myself, Joel, look, okay, tried to get over, came back down, tried to get over again, came back down. Now it tried to get over again, it's hovering. Maybe it's about to go on a continued down run. And also, what's the market doing at the same time? If I think back, I'm pretty sure at that time, um, it might have been coming off as well and getting under 246 at that point, if I remember correctly. Um, so just some stuff to consider, but altogether a decent opportunity that I made something out of. So some things I did well, didn't hesitate to take a trade that I felt comfortable with, and just, I guess I did hesitate slightly, but I got in, and today for some reason there was like literally maybe at least three, but maybe like 5, 6 times I can remember that I just let something like that go and I couldn't quite pull the trigger. By the time I was really thinking about pulling the trigger, the opportunity was gone. So I'm glad I was able to do this. And I think with time, I'll be able to kind of just do things faster and more automatically and find my opportunities and take them. Because it goes both ways. If you're going to be disciplined and hit out of a stock when it goes against you, you got to be disciplined and get into a trade that you feel comfortable with. Um, some areas of improvement. I wasn't sure exactly where to put my stop at first, and it's not a good habit to get into for a number of reasons because A, you should have an understanding of how much you're willing to risk and where you're trying to go in terms of like profits for a trade. So long term, your risk versus reward works out in your favor. But then also, once you get in a trade, if you're watching and you're trying to think about where to set your stop, you're not thinking and watching what's going on and ascertaining like where is the trade right now and do you want to be out of the trade. So it's kind of like taking away brain power that you would otherwise be focusing on just like being completely locked in. So, but I feel like I made a good choice once I got in the trade. So I think what I need to ask myself is like, okay, this looks like you're going to maybe get in a trade here. Where are you going to put your stop? And think about it before you hit the sell button, if possible. Um, and maybe that isn't always possible, but just with time and with doing reviews like this, eventually it'll start to become second nature. The other thing is like might have waited to take that first partial at 87 cents, like, or maybe just take 25 shares and just kind of like pay for the trade, so to speak, and then, put my stop just over 133 at that point, just in case it came back up. But that's something that I'll, continue to fine tune as I go forward. But anyways, that's my playbook trade for today. Thanks for watching.